In 2008, the world's financial system crumbled, brought to its knees by the same banks we were all forced to trust. Ordinary people lost everything, that trust was broken, but out of that chaos, a mysterious figure known only as Satoshi Nakamoto dropped a radical solution. A new kind of money, free from the control of governments and banks. He called it a peer-to-peer electronic cash system. Today, that rebellion is a multi-trillion-dollar asset, embraced by the very institutions it was built to oppose. In 2008, the world's financial system crumbled, brought to its knees by the same banks we were all forced to trust. Ordinary people lost everything, that trust was broken, but out of that chaos, a mysterious figure known only as Satoshi Nakamoto dropped a radical solution. A new kind of money, free from the control of governments and banks. He called it a peer-to-peer electronic cash system. It was a decentralized rebellion built on a technology where you didn't need to trust anyone. The math did the proving for you. Today, that rebellion is a multi-trillion-dollar asset, embraced by the very institutions it was built to oppose. So what would its creator think of it now? The answer reveals a shocking clash of ideals, one that might just betray his original vision entirely. To understand what Satoshi would say, we have to go back to why he created Bitcoin in the first place. It wasn't just a technical experiment, it was an ideological statement. It was a direct shot at a system in crisis. Inside the very first block ever mined, the Genesis block, Satoshi hid a message. It was a headline from the Times newspaper, "Chancellor on brink of second bailout for banks." This wasn't a random choice. It was a timestamp, a mission statement, and a permanent indictment of the traditional financial system. A system where Wall Street's losses were socialized, and the public paid the price for the recklessness of a few. Satoshi's white paper was the proposed antidote. It described a system of peer-to-peer electronic cash, where for the first time in history, two people could transact directly with one another, anywhere in the world, without needing a bank or any other intermediary. This wasn't just about convenience, it was about power. It was about taking back control. The core philosophy was rooted in libertarian and cypherpunk ideals, financial sovereignty, censorship resistance, and a predictable monetary policy that no central bank could inflate away. With a hard cap of 21 million coins, Bitcoin was built to be the polar opposite of fiat currencies, which could be printed into oblivion on a whim. It was meant to be sound money for a digital world. Satoshi's vision was clear, elegant, and profoundly rebellious. It was a tool for individual freedom, designed to operate outside the grasp of state and corporate control. A system where trust was replaced by cryptographic proof. For the early adopters, it wasn't an investment, it was a cause. Fast forward to today, the landscape is almost unrecognizable. The rebellion, it seems, has put on a suit and tie. The biggest change? Wall Street has arrived. Big time. After the landmark launch of Bitcoin ETFs in early 2024, staggering amounts of capital began pouring in from institutional giants, the very firms Bitcoin was designed to circumvent. An exchange-traded fund, or ETF, lets investors get exposure to Bitcoin without ever holding it themselves. It's a regulated, sanitized, and centrally custodied version of the asset. The irony is staggering. To buy the very asset designed to make banks obsolete, most people now go through, well, a bank-like institution. This flood of institutional cash brought a new narrative with it. Digital gold. The idea of Bitcoin as a peer-to-peer cash system for daily transactions has been almost completely abandoned. Instead, it's now seen as a store of value, an asset you hodl in the hope its price goes up. It's become a speculative playground, where people cheer for the very economic instability Satoshi seemed to hate, simply because it might pump the price, and with the money, came the regulators. Governments are no longer ignoring Bitcoin, they are actively working to control it. Rules like the travel rule are being rolled out, forcing companies to collect and share your personal data for crypto transfers, effectively ending the pseudonymity Satoshi had designed. In the US and abroad, the direction is clear. Bring crypto into the existing financial system, with all the surveillance that entails. The very act of buying Bitcoin now requires extensive Know Your Customer or KYC procedures, linking your identity to your coins forever. This is the Great Clash. Think about it. A technology built for decentralization is now accessed through centralized platforms. An asset designed for privacy is being subjected to mass surveillance. A tool for peer-to-peer exchange is now treated like a speculative commodity held in the vaults of Wall Street. It's a world away from the cypherpunk dream. If you're getting value from this breakdown of Bitcoin's identity crisis, do us a favor and hit that subscribe button. We go past the hype to find the hard truths every single week. So, this brings us to the ultimate question. What would Satoshi say about this market? Would he be appalled or proud? The truth is, you can make a powerful case for both. First, let's make the case for betrayal. From this point of view, Satoshi would be horrified. The core purpose of his invention was to eliminate the need for trusted third parties. Yet the modern Bitcoin ecosystem is built on them. Centralized exchanges, ETF custodians, and lending platforms have all reintroduced the very counterparty risk Bitcoin was designed to solve. He'd see his system morphing into the very thing he fought against. He'd see that privacy, a principle he was careful about, has been systematically eroded. Satoshi was a realist. He knew total anonymity was tough, but he would likely be shocked at how eagerly the industry has embraced KYC regulations that link every transaction to a real-world identity, turning the transparent ledger into a potential tool of mass surveillance. He might argue that the focus on number-go-up speculation and the digital gold narrative has come at the expense of its utility as a medium of exchange. He would argue that his revolution has been co-opted, tamed, and sold back to the public in a neat, regulated package. The movement has lost its authenticity. But now for the other side of the coin, evolution. This argument says Satoshi was a pragmatist, and he'd get that adoption is a messy business. From this angle, Satoshi would be incredibly proud of one thing above all. The core protocol has not been compromised. The heart of Bitcoin, the decentralized network, the 21 million coin limit, and the cryptographic security remains intact. No government or corporation has been able to change the rules. The code is still law. He might see institutional adoption and regulatory frameworks not as a defeat, but as a Trojan horse, a bridge for millions to enter the ecosystem. While they may start with a regulated product like an ETF, they are now one step closer to discovering self-custody and the true meaning of financial sovereignty. You have to get Bitcoin inside the city walls before it can conquer them. This argument also holds that the digital gold narrative is a vital natural step. Before a new asset can become a global medium of exchange, it must first become a widely accepted store of value. People need to trust that it will hold its value over time before they are willing to spend it daily. This is simply a phase in Bitcoin's monetization. So from this viewpoint, this isn't betrayal, it's adaptation. It is a reflection of the market's collective will, which currently values it more as a store of value. Satoshi released his creation into the wild, and for it to survive, it had to evolve and compete in the real world, not just a theoretical cypherpunk utopia. Its resilience and continued growth are a testament to the power of his original design. So, where does that leave us? With two conflicting truths, a vision of stateless, private, peer-to-peer cash that has been compromised by the very forces of centralization it sought to destroy, and a resilient, incorruptible protocol that has successfully infiltrated the global financial system by adapting to its rules, positioning itself for even greater adoption. Is this the story of a rebellion that sold out, or the story of a revolution that's playing the long game? Satoshi has remained silent, a ghost in the machine, leaving the rest of us to debate the soul of his creation. We are left with the code, the white paper, and the fundamental question he forced upon the world. And perhaps that's the real answer. Satoshi may have designed Bitcoin, but he doesn't own it. We do. And its future is defined not by what he would say, but by what we choose to do with it. This is one of the biggest debates in crypto. So what do you think? Has Bitcoin's soul been sold, or has it just found a new way to win? Let us know your thoughts in the comments below. We read all of them.